Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at SPY on the daily and weekly time frame, and this middle Bollinger Band, 5 of the last 6 days holding as support, a rally at the end of the day to keep that level by a couple pennies, and it is coming down. It feels like we're setting up for tomorrow in the inauguration to be the deal breaker here, either an all-time high or a loss of this middle Bollinger Band, which would have us looking at 224.96, and then the low of the pullback right before the new year down at 222.73. So the bulls are barely clinging on. We've got that inauguration tomorrow. I believe noon is when the action will start. And on the weekly time frame, inside candlesticks multiple weeks in a row show how tight this range is getting. And if we do not see a break of that range this week, we certainly will next week. Can't get much tighter than this. And we see that with just the sideways trading. And it's going to be a very interesting day tomorrow. So checking in on the shorter term time frames, you almost had the feeling at the end of the day that the bulls were going to make that rally and keep that level. It was very clear that the bears were in control from the start. This 227 psychological level was the all-time high at one point before we got that 227.75. And ever since then, we've seen it come back into play time and time again, usually as resistance, but it has acted as support a few times. Anyways, we rejected from that level to the penny, and then the bears took over for the rest of the day, and it was nothing but lower highs and lower lows. After we hit that level and hit the new low of the day, it was pretty clear that the bears were in control. Look at this 200 period 5-minute resistance. We lost it. 1 back test and rejection, 2, 3, 4, 5, 6, 7, 8 rejections from that moving average resistance, and then the bears saw a final dump once we hit that new low of the day. So you can just see the psychology of the candlestick and the volume. It's very clear that algos and traders alike are watching this low, 226.06, and as soon as it broke, big time move to the downside, but a recovery by the bulls, keeping that level right at the close. The hourly time frame, these moving averages now are all resistance, but they're all at the same levels in the mid 226s. So there's going to be a tough resistance band going into tomorrow at those levels, and we'll see if the bulls are going to be able to get over them. You can see as of this point, still a fairly weak bounce attempt after that dump all day, being controlled by the bears, and we have to get back over all those moving averages, turn them into support in order to be looking back up to 227 psychological resistance. So I believe, in my opinion, it seems like the sentiment is more bearish than bullish heading into tomorrow. And oftentimes I like to take the contrarian approach. Whenever everybody thinks one thing is going to happen, I start to look in the other direction, because certainly more often than not, we don't have the market doing what everybody thinks it's going to do. So we have a lot of people expecting bearish. And if we see a break of the low of today, 225.41, we will know the bears have a lot of momentum, but not putting it out of question for a quick dump and then a complete turnaround and rally, just like we saw once Trump was elected. So need to be ready for everything. Going to be watching the short-term action and the volume for clues. And this is going to really set the tone for the rest of the month in terms of which direction to be looking, in my opinion, once we see how things settle and how we end the day tomorrow. The ending of the day is going to be key. the knee-jerk reaction won't really be as meaningful in my opinion. And when I say knee-jerk reaction, I mean the reaction in the first 15, 20 minutes. So we'll check back in tomorrow and see how it all wraps up. I appreciate you watching, and I'll see you then.